Good morning, legends. Did you watch this move last night and think to yourself, I missed it, I must be doing something wrong? If you've been watching me for a while, then you would have heard me say many times that every move in the market is done by design. What happened last night is no different. Welcome to the straightaway trade. The straightaway trade is designed to finish off all the traders that went short down here. And in this video, I'm going to explain exactly how it works and why, if you missed it, you didn't do anything wrong. So if you're someone who wants to understand why every move in the market happens, what this by design means, and not just settle for basic TA, then you've come to the right channel. If you're new here, welcome. If you're returning, welcome back. Don't forget to hit that like button, subscribe button, and turn the bell notifications to all so that you can be notified every time I upload a new video. If you don't want to do that yet, give me 9 minutes. And if you have not learned something in 9 minutes, then you don't have to subscribe. But today's video is going to be a lesson that A, is either going to make you feel better if you miss this trade, or B, is going to make you realize that the trade, if you got it, didn't come from skill, it came from luck. Now, for me personally, what excites me is not when I take trades that make me money. What excites me is that when I take well executed trades that I can look back and really know why I got in and understand that I understood the market maker in that moment and I traded like a market maker as opposed to trading like a retail trader, because I know that retail doesn't move the market. So let's get into this straightaway trade. Before we go forward into the trade, I have to go back to show you the setup. So as we know, zooming out on a higher time frame, this whole week here was the rise level 1, 2, and 3. We know that now. So we had a big drop here for rise level 1, a big drop here for 2, and then we had the final drop here for 3. Now, usually that would happen before a midweek reversal. This week is tricky because we had a holiday period right in the middle. My suspicion was that the normal weekly cycle is going to play out over 2 weeks. That's yet to be proven, but so far we're on the right track because we've had the 3 level drops on a higher time frame and the W formation you can see on the 1 hour, and you can also see it more clearly on lower time frames. But after the 3 drops, you get the W formation here, which leads into a rise level 1. Now the W formation is designed to trap short traders who FOMO'd into a short position after seeing the market drop those 3 times. It's the psychology of 3. Things happen in threes. So by the time you see the 3rd drop, you think, oh, I need to open a short position. This thing's not stopping. So you end up opening a short position at the exact worst time. So now these people who open short positions in any of these candles got stuck when price started to reverse. I'm going to do this on the 15-minute time frame so you can see it better. So now in this moment of time, these people who open short positions down here are now thinking, oh no, the trade's going against me. I don't want to lose my money, blah, blah, blah. And they end up widening their stop. Now, widening your stop is an emotional decision that the market maker knows you're going to take if they can induce you to take it. So you see this moving up, you widen your stop, you start to see these wicks here and you think it's okay, it's going to come back to break even and I'll get out and everything will be fine. The market maker knows you're thinking that. So they bring price back down here and they create the higher low. The reason for the higher low is to keep you trapped, because as a retail trader, you're not willing to take losses. And they know that, so they bring price back down close enough, but not to where you can get to your break even and get out. So now you're still stuck in your short trade. From there, they go to the rise level 1, which is what we're seeing here. So this was the level 1 rise. And again, depending on your leverage size, you could move your stop again. Now you have a huge stop. However, it's dependent on the leverage that you took. So this here, this move that happened earlier this week would have taken out the 100x and the 50x traders, but the 25x traders may have still been okay. So now let's just say the 25x traders are still in, but the 50 and the 100x traders are now liquidated, gone, and the market maker has collected their stops. Then we move into the boardroom. So we're in this consolidation, and during this consolidation, all these wicks here are tests to the upside on purpose, designed to make you think that the market is going to reverse, and maybe if you just hold on long enough, it will come back down again and you'll be able to get out. Again, by design, they know you think that. So they hold this consolidation here, they give you these wicks, These wicks are designed for you to add to a losing trade. So you might decide, I'm going to double up here and get my average entry up. So let's just say your average entry is somewhere here now, right? You got your stop loss up here, and now you've got double the amount of money on the trade you originally had, and you are over leveraged. And when the market maker knows you're over leveraged, he brings in the straightaway trade, which is this move here. So let's talk in detail about the straightaway trade. As I said, the straightaway trade is designed to finish off the traders who took a short position at the bottom of the W formation. How do I know this is a straightaway trade? Well, it works like this. It comes after a rise level 1. And so from rise level 1, we can go into the boardroom, which is what we did here. We had the wicks test to the upside, which was a potential signal of a reversal. Usually when you get the 3 wicks outside of the high of the day, you would think that a reversal is imminent. How you know that we're going to go for another leg up usually is a stop hunt after the 3 rises. Well, now we didn't get the stop hunt, and that's why I know that this was a straightaway trade. The straightaway trade is when they move the market so sharply and so strongly in one direction that there is no chance for you to get in using correct technical analysis. Because if we zoom in here, this move here was highly bearish. Look at that huge wick to the top. So if anyone opened a position after that thinking this was a higher low, it was a bad position, because this here was an indication of bears pushing price down. That's not a good position if you took it there. Taking it here, why would you open a position that close to the resistance level? Not only that, you need to wait for a retest because you have these wicks above. So taking a position here wasn't a good position either. And where would you have to have your stop in order to be safe? So let's just say you took it on this breakout. Your stop loss is under here, and the trade, if you happen to catch the very top of the wick, you've got a 1.45 to 1 risk to reward. It's not a high quality trade. So here's the thing. It's like I said, it's done by design. So what they do is, by not giving the stop hunt, if you understand the system, you don't open a long trade. Because if they had given us a stop hunt, we could have taken a position off the support, because we would have seen the stop hunt and we would have known what it meant. We could have had our stop loss just under here, and the high of the day is up here. Now we've got a 5.7 to 1 risk to reward. That would have been a much better trade. So if you were waiting for that, if you were waiting for a pullback, which my conditions were, I don't want to take a long out of here unless I get a pullback, because I want a high quality trade. I don't just want money. Okay. So I didn't get it. It didn't meet my conditions, and that's totally fine. Do you know why? Because now I know that this is the straightaway, which means that it's also the level 2 rise, which means that there is one more chance of a rise before the midweek reversal. Now we are at Wednesday, so we have to prepare that the midweek reversal can come anytime from today. But just to go back to this straightaway trade, they do this on purpose, and they do it in 3 strong pushes, right? So here was the one after that wick, here was the second strong push, and here was the third strong push. So if you stayed up watching it, you would have seen how fast that whole move moved, and it just didn't stop. So the straightaway trade comes after the level 1 rise, but you will see 3 sharp pushes. And if your question is, how do I catch it? The answer is luck, which makes it not a high quality trade. So there is no way to preempt the straightaway trade coming. That's the thing. So when I said I'm going to make you feel better, that should make you feel better. If you watched this last night and felt like you missed it or you did something wrong, you didn't, because anyone who got this got it out of luck, and good for them. But if you were waiting for the right technicals, you should actually be really proud of yourself, because you set a rule that you don't want to take a long trade unless you get a retracement, because you only want a high quality trade. And congratulations, because that's what you should do. Because whilst the people got lucky on this one out here, next time they won't. Do you know what I mean? So we want to collect as much high quality trades as possible. So I hope that explained the straightaway trade. The good news is that if you're learning the market maker method and you get to a point where you're confident enough to hold your trades out of a W formation into the boardroom and know what to look for here to exit, the good news is that eventually you'll be able to hold through all 3 rises. And so you would have caught this just because you made the amazing decision to go long at the W. So all of that will be coming in your future, right? And then the other good news is that we have a potential for a level 3 rise today. Now, The problems that we have with the level 3 rise is we're very close to the high of the day, and actually it could almost be coming like quite soon, because if we mark this out here, we've got a break in this trend currently. So if we had a retest, that could be a good entry for a little day trade just up to the high of the day. Now, just because this was a big move here and this was a big move here doesn't mean rise level 3 is going to be a big move. Your target is still going to be the high of the day. So if price does push out here and comes back to retest, create a higher low, there could be a good entry there, and it might be a small move, but it might be the last rise before the midweek reversal, and here you could have yourself almost a 3-to-1 trade. So there's still a possibility to make some money today if the right conditions are met. So that's what to watch for today. See if you get a retest, you might get a little day trade up to the high of the day. I wouldn't be trying to push it up to the high of the week, because the high of the week is all the way here up at 47,500. So let's just aim for the initial high of the day and see if we can take that out. And then once we get that, if we head back into the boardroom, start looking for those M formations for a reversal. Now, keeping in mind our bigger channel on the daily, we've got that center line that we need to look out for here. So we've got the center line up here currently. If price were to push straight up, that would take us to around 43,200. And just know that anytime we're under this, even if we have pushes to the upside, we're still bearish under this line. So even when we have these nice big long pushes out, still look for reversal patterns on smaller time frames, because this push here could just be creating a lower high before we break this channel and actually head down. And we have to be prepared for that, even though it feels bullish and, you know, we're back at 41,500 almost again, and it all feels great. Until we cross this, we still have a very high chance of price rejecting and breaking this channel. Let's take a very quick look at the liquidation levels on high block and trading light and see if we can get a little bit of a sneaky peek as to what's going on behind the scenes. Okay, high block. So these were the big 3 circles. I covered these on my high block tutorial. If you're wanting to understand in depth how to use high block and you haven't seen that yet, I'll leave the link somewhere above this video so that you can check it out after this one. But these were the levels where the shorts at risk were massive. There was about $1 billion worth just in this range here. And as you can see now, they've all been taken out because price has pushed right up. And so after price here, you can see there are no more blue or turquoise or green lines, meaning they've been liquidated. The deltas to the longs were currently at 8 billion, which does add to my reasoning that we may push up a little bit higher, because pushing up higher will encourage more longs. At 8 billion, it's not that much of a worry. We want to get up closer to around 20 before we think any reversal's coming. So this kind of adds to my thinking that level 3 rise might come sometime soon. The highest levels that I can see above price, this one here is standing out immediately. That's at 42,300. So we want to see a 42,300 kind of area, lines up with anything that we can see on trading light, lines up with a high of the day. And if we can get all of those 3 things matching, then we're going to be pretty on track with that being the target top before a midweek reversal. Okay, so on the 4-hour time frame, we do have some weakness in the last 2 candles. Still an hour to go on the current candle. We've got some buys below price here at 41,000 down to 40,750. And we've got some sells currently above price. These ones here that are really close to price, they could just be the reason that we're getting dojis at the moment. So we may get that a pullback into these levels here. But the next targets up here are at 42,100 to 42,200. Actually, no, we have these ones flashing here at 41,800. So better mark that as a level to be safe. Okay, so now when you see that on a chart, you can see here that those take profit levels are around the high of the day. Now, I do use the OKX charts, just FYI, because OKX is the exchange that I trade on, and they do have different daily openings and weekly targets than most of the other exchanges. I trade on OKX because not only can I trade futures there, but I can also trade coin margin contracts. And when we head into a bull market, I will talk more about that, into a sustained bull market, I will talk more about that, because coin margin futures allows you to take trades and accumulate the actual coins as opposed to taking your profits in USDT. So we will talk about that when the bull market returns, but you can't do that on most other exchanges. FTX, you can't do it. So that's why I use OKX. So if you are looking for somewhere to trade futures, get used to using OKX now, because you don't want to be learning how to use it when the bull market returns, and you have the option to take your profits in Bitcoin and Ethereum and DOT and most of the top coins that you're probably accumulating anyway. So anyway, point being, my high of the day is based off the OKX chart, but if you were using Binance or something else, your number may not match up exact, and that's fine. The point being that we don't have to get to the exact high of the day. The goal is to get close to it. So this take profit area that's just above, it might match up better on a Binance chart or something else. It's irrelevant. The point being that those take profits are very close to the high of the day. So it's just a very interesting level. And the buy zone could mean that what we're doing right now is creating a bull flag type of formation. When we draw fibs on this whole little area here, you can see that the buy zone is around the 61.8. So I would not rule out a level 3 rise coming today and this turning out to be a bull flag. Maybe the Asia session will consolidate downwards and give us that bull flag. We still need to break this support, so don't bank on it being a bull flag, because if price comes down here and creates another double bottom, it could break out from there. So just be aware of that. You need to watch the price action at the time if you're not using Trading Light. If you are using Trading Light and price gets back down here, then you can reassess where the buys are when price hits there. If you need a code to Trading Light, it is in the description of my videos. So make sure you head there to grab that, along with OKX or Binance, or there's lots of stuff down there. But anyway, need to wait and see if we do get that double bottom. Well, actually it would be a triple bottom. If not, then I would start looking for a flag formation. Now currently it's not a flag formation. This is just an idea I'm pointing out there. It's not a flag currently because we do only have one touch to the bottom. So what we're looking for today is see if we can come down and actually create more touches to this trend line. If not, then we're looking at a descending triangle. We may not get all the way down to the buy zone, but from a descending triangle, you're looking for a breakout to the upside. And if we get all of that, then for me, my take profit is always under the short orders that I see in Trading Light. So my take profit is going to be under my high of day. But again, for me, it has to be a quality trade. So even while this may happen, and that could be an okay day trade, in an ideal world, I want to get back close to this buy zone. I would front run it, take my entry just above it, and then look for that. It's going to give me a much better risk to reward. It may take more patience, but it's worth it. But at the same time, I will be monitoring those Trading Light buys and sells to see if anything changes. And if anything dramatic does change between my videos, I do post updates on my Twitter. So if you're not following me there, make sure you head over and follow me. There are a lot of scam accounts out there, so just make sure you're following the right one and grab the links from the description of this video. Don't just search it, because you could end up following the wrong account. And if any of those accounts message you and say that I trade for you and whatnot, I don't do that. I'll never take your money. I never ask for people's money. I never offer to trade for them. I don't promise returns, none of that. So if you ever get messages like that from someone pretending to be me, just know it's not me. Okay, so that's my play of the day. For me, not looking for shorts, because we have a confirmed rise level 1 and 2. So it has to be just a level 3 now before a midweek reversal. And it's just a matter of finding that best spot to long. Hope this video was helpful. If it was, don't forget to smash that like button, hit the subscribe if you're not already subscribed, and leave me a comment below. Were you feeling sad that you missed the straightaway? And did this video make you feel better about it? See you tomorrow.